Hi, this is a Devins Financial Weekly Stock Analysis newsletter. Today is December 22nd, 2014. Our newsletter is for your informational purpose only. We're not responsible for your gains or losses. Let's take a look at the current market trend and our strategy. US stock market is in a correction. I'm mostly in cash and only have a very small position in a few stocks. Let's take a look at the indices and their charts. German DAX index rebound from 50-day moving average. China Shanghai Stock Exchange index is in a very strong uptrend. See this one, it hit very high and then corrected, hit 10-day moving average and rebound again. Now it's making a new high. So this index is in the uptrend. Nasdaq index, this is still in correction. It hasn't followed through yet, although it rebounded and go above 50-day moving average. Later part of this newsletter, I'm gonna illustrate what the correction means. Mid cap is the same, rebounded from a 50-day moving average. Small cap is actually a breakout from this little correction, this little range here. Large cap SP 500 index rebounded from a 50-day moving average. Gold index is still in a downtrend. Silver index is still in a downtrend. Gold mining stock index downtrend. US dollar uptrend made a new high. Crude oil downtrend, very strong downtrend. Now it's rebounding, but the trend is still going down. FXI is an ETF of the China ADRs, and right now it's in the uptrend here, rebounding from 50-day moving average. IYR is a real estate index ETF. This is in the uptrend. This index is in the uptrend. JJC is a copper price downtrend. Mortgage bond fund price is in the uptrend. Mortgage interest rate is in the downtrend. Semiconductor index is in the uptrend. It came down but rebounded. Social media index downtrend. Solar stock index downtrend. Energy ETF is in a downtrend, however, is rebounded from the oversold condition. XLF is a financial ETF, rebounded from 50-day moving average here. Next, we're going to show the list of stocks, and the first list is the strong stocks, but they're overextended. Alibaba, Palo Alto Networks, and Restoration Hardware. Second list are the stocks that break out, but they're still within the buy range. They are still buyable. Baidu and LinkedIn, those are the two stocks. And third list is the stock that's building a base. Illumina, this is a biotech company, is building a new base. Third list are the list of stocks that's previously strong but now is weak. Apple. HEBT is a restaurant stock. Tesla and the GoPro and the Visa. So let's take a quick look at those lists. First list are the stocks that's overextended. Alibaba broke out right here around $100 and came down again. Now it rebound from a 50-day moving average, and this is actually a pretty positive here. It's able to rebound from 50-day moving average. That's a good sign. Palo Alto Networks make a new high. It's just like going up the stairs. It will correct and go sideways and go and jump up again and go sideways and then jump up again. Now it's break out from this little consolidation. However, there's no proper buy point. This stock should have been bought right here in this area, and that's a buy point. But right now, there's not a proper buy point here. Restoration Hardware, this is also overextended. Breakout point is right here, the gap up here. Second list are the stocks in the buy point. Baidu broke out right here. It consolidated, came down, and now it's back up to the buy point again, and also go above 50-day moving average. The negative thing about this is the volume is low on the up days. Volume was high on the down days, so it's a little bit it's just not optimal. So basically, LinkedIn is doing very well. LinkedIn on the jump up day here, the volume is pretty high, but it went through consolidation and then it just came back up again. And this is a breakout. Friday was a breakout. The only negative thing is on the breakout day, it closed on the low part of the daily range. That's not very good. However, it's still a valid breakout. This is a stock that's making a base. Illumina is making a new base here. Previously, it break out from here, but now it just started making a new base. This is a flat base. Breakout point is 196 point what? So $196.10. That's a breakout point. Then the fourth list of the stocks in trouble. Apple. This is a stock. It had a nice uptrend over here, but suddenly it just dropped and break through 10-day, 20, 30-day moving average and tried to rebound, but it couldn't hold. When they mid 10-day moving average, it came down again. It even touched below the 50-day moving average. Right now it's bounced above 50-day moving average. However, this is very cautious. This is could be making some kind of head and shoulder or double head, who knows. But right now, this is a stock is not very good. GoPro is totally in downtrend. This stock previously have a very nice uptrend, breakout from the IPO base right here and $50. A breakout at $50 went all the way almost. It went all the way to $98, a little bit below $100, but it couldn't break above $100. It just came down and then make a consolidation and break down to the downside. So this is a bad stock. This is right now it's in a very bad situation. The company is still good. However, the stock price is coming down. There are a lot of things behind the price other than the company's product. Even though this company has a superior product, but the stock is being sold, and lots of high volume on the selling day, on the down days. That's the sellers. There's more sellers than the buyer in this stock. So as an individual investor, we should stay out of it. How about restaurants? This is a IPO stock. It broke out here, but it just immediately came down. That's a bad down day. This is a higher volume than the previous updates. So again, this stock is being sold, so one should stay out of it. Tesla is in the downtrend. It broke 50-day moving average, broke 200-day moving average. Now it's just heading down. Visa is not that bad yet, but it shows trouble sign here. Visa previously had a very nice run up. However, it came down here. Whenever stock tried to make a high but couldn't hold and close down instead, that's the first sign of trouble. And volume on the down days is higher than the up days, so that's another indication there are more sellers than buyers, so one should stay out of it. So that's our four list. I'll quickly introduce the concept of the follow through day. Why is it important? Because right now during a market correction, we need to wait, and we should not buy new stocks until the market follows through. But what is a follow through? So when market make a new low, if it can close higher on that day when they make the new low, if can close near the high of the day or close high the day after, then that's a day one of the attempted rally. And if day two, day three did not break that low, then we just continue. If day two, day three, or any day after that break the low made on the day one, then the count just start all over again. The day that make a new low will be the day one. So anyhow, on the day after day three, between day four and day seven, if there's a follow through day, then market has a potential to go back up. Follow through day is defined on again greater than 1.7% with a heavier volume than the previous day. And after day seven, you can still have a follow through day, but usually market uptrend on there will be weaker. From the chart will be like this. Market is in correction, and then it made a new low, but it closed on the high upper range of that day. This is a day one attempted rally. Day two did not break the low. Day three did not break the low. Day four, and there's also no follow through, but on the day six, market ran up and 2.45% with a volume higher than previous day. So that is a follow through day on the day six. We can take a look at the candle chart here. This is day one. Day one established the new low, basically. Day two, three, four, five did not break that new low. On the day six, market follow through here. And okay, this is a different time frame than the previous chart. But anyhow, on the day six, market follow through. And then that's a indication market has a potential to go back up to the uptrend. Follow through day does not always lead to the uptrend. However, every uptrend will have a follow through day, will be led by a follow through day, basically. And that's all for this week. And see you next week. Merry Christmas and Happy New Year to you all.